Welcome to Power Charting. I am your host, Bruce Fraser. With me today is guest host Johnny Scan, John Colucci. John, how are you?
Wonderful, Professor. Great to be here as always.
We have a really great show today, and I'm excited for this discussion that we're going to have about seasonality. We're also going to do some market updates and then get into sector analysis, which is really, I think, very interesting at this time. So, big fall conference coming up. You can watch this conference both as a attendee at the conference itself, or you can watch it virtually. And all members of the TSAA are able to watch this included with the price of their membership, and then also a slightly higher charge to attend live at Golden Gate University in San Francisco. Great sponsors, and just go to tsaasf.org to learn more and to become a member. And also, if you are a member, renew your membership. Now, getting into the markets today, you can see here that, and this is a chart we looked at last week, is that we did in fact go into this area here where there were three forms of resistance that were quite apparent, and those resistance levels all colluded together to create a reversal in the market after a bit of a climax. Very sharp down move, which I think is important because there's a big gap in here showing tremendous amounts of supply, attempt to rally very, very briefly, and now just a continuation of this decline right into the end of August. And so, John, looking at this, it looks pretty much like the market, the indexes are for sale. What do you think?
Well, certainly looks that way, and I can just chronicle the emotions as we reach that first climactic area at the horizontal resistance. Oh my goodness, it's going to break out. Then it broke out. Then it's the little engine that could. It's going to get through, maybe new highs, smash down to a test, a lower test, and then now sliding deep, deep into the structure, possibly approaching what was perhaps a preliminary support. So really a roller coaster of emotions going through this. Such hope dashed on the rocks.
So this sharp advance that occurred in August was immediately taken back, and it was taken back quicker than the rise up, which really shows a tremendous amount of supply present, and volume is expanding, showing supply is evident. There is an attempt today to put in a tail so far. This is not through the end of the day in the SPY, and there is the possibility of an attempt to hold, and we will look at some point and figure data here in a minute. But we had talked about the idea that this could be a last point of support. Now, a number of things would have to happen in here before we could conclude that that's the case, and we do not want to get ahead of this market because there is all the potential in the world for this to just keep going right back down to the June lows and maybe lower. And so again, when you're in a downtrend, as we have been through all of 2022, you have to really be aware of, respectful of that downtrend and the speed at which a rally can become a reaction or a primary downtrend again. So clearly that's the case with this chart. Now, these point and figure charts were looked at last week, or I believe the one on the left was. And here, John, we can see that there was a bit of a distribution that formed across this area, which became countable. This is a daily data, and it's a one-box swing trading method, I like to call it. And this count takes us down to 12,700 on the NDX to 12,100, and look where we are today. So it's possible that this could in fact stop the decline, maybe just briefly, maybe a little longer, and we will see whether or not this can consolidate, bounce, and then we'll ask the question whether there is the potential for an LPS. And but John, what I really want to show you is this little yellow shaded area. If we go into 10-minute data, now this is daily on the left, this is the NASDAQ comp on the right, similar, slightly different from the end, well, no, this, let's see, I take that back. This is mislabeled right here. This is actually the NDX. And so here you can see that the comp does have a distributional structure, has preliminary supply, and then it has a climactic surge up here, which throws over the top of this channel that was formed, and then just an outright failure back to the bottom of the channel. And that's when the selling really got started here. And this produced a sign of weakness. This is all occurring in a 10-minute chart, 10-minute data. And then a rally of poor quality cannot get back up to the level of the preliminary supply point. So then down into a new decline, a lot of supply present, and we then can take this count. I know some of you are asking the question, shouldn't we be counting from preliminary supply over to the last point of supply? And let's just label this. And John, what I'm thinking here is that on this rally up to resistance, up to the top of the channel, this is where the real supply showed up in this big decline right here. This was the first really big warning that there was trouble in this chart and supply was present. And then finally the climactic surge and the throwover. This is why I believe this to be the more conservative count initially. And it could very well be that we have to count over to here also and add those additional columns. So John, look where we are. We're down to 11,616 as of today. And you can see here that the count went to 11,518. This is really close to being able to call this a minimum objective being fulfilled. Now, again, keep in mind, this is a 10-minute point and figure chart. John, your thoughts?
Well, certainly the milk was spilt and now we're into the tears.
Exactly. So it's really a very sharp decline with a lot of supply present, and the point and figure charts are doing a pretty darn good job of showing the way. So we will look at some sentiment here in a minute, but let's go to the Qs, and we can see here on the Qs that we went up to within one box of the minimum objective. And John, as a general rule, when I look at a range, an objective range, in this case 336 to 360, and we only can get to the bottom of the lower objective number in a rally, this tends to tell me that this is a market that is inherently weak. And so the response after that, and this chart is through yesterday, August 31st. So, and here's where we are at 295 right now. So this really is, I think, demonstrating that this market, even though it was a reasonably good rally, it could not fulfill its potential up to the 360 level or even get close to it. And if you look over here on the right, this is a 15-minute chart. This also is 15 minutes. One box method, 2-point scaling, so you get more detail here. Did a super good job of picking up the rally phase here, getting again within one box of the minimum objective, and then building distribution, and now it's in this downtrend. And look where it is, John. We're right in the middle of the count area of this. It's a very small 15-minute swing trading count. What do you think?
Well, it's uncanny. It's uncanny. It's amazing how the P&F work really gives us an indication of what to expect. It's prognostic.
So there's the idea here, John, that we could have a much bigger structure. So we're down here in this area, that this whole area could ultimately prove to be some kind of account. But we're going to look at seasonality here in a minute, which I think could, in effect, temper our spirit a little bit about the potential for a rally starting. And then, but also it gives us some hope for the future too. So let's get right to that. Finally, I just want to show the put call ratio. And this is the CBOE equity option put call ratio. When very high put activity is occurring, there's a lot of pessimism. So up here you can see bearish speculation. People are pessimistic. The red vertical lines really represent when you get above the yellow area. But keep in mind that you can get way above the yellow areas, like at the COVID low and this yellow threshold, and also which occurred at the end of 2018. So we look for causes to be built, and we also look for the sentiment to be extreme while a cause is forming. And here, John, we are starting to really go north quickly, which goes to your comment about the about the tiers or the sentiment really turning very quickly here.
For the folks at home, Professor, could you explain briefly what the put call ratio is? Maybe what the idea of the put side versus the call side, bullish, bearish?
Yes, the puts, when you buy a put as a speculation or as a hedge against a position, that is going to appreciate in value if the underlying instrument goes down. So for people that speculate in put buying, they're speculating that the underlying instrument is going to decline in value. Call buying is to speculate that the underlying instrument is going to go up in value in a stated period of time. And so the ratio is a ratio where you're really measuring the assumption that put buyers are bearish and call buyers are bullish. And when the ratio gets to an extreme one way or the other, you have the potential for a reversal. And it's a contrary indicator. High put buying says that you could be near an important low because there's a lot of pessimism. High call buying says that you're near a high and could be getting ready for some kind of a reversal. And so you look for the extremes in these readings for them to get above thresholds. And this green line is a 10-day moving average to smooth this very volatile data. And the reason that I took and didn't really analyze this area in here is, John, I really think that this whole rally off the COVID lows was a climactic of his surge of historic proportion over the course of this period, where there was just an immense amount of bullish call buying and just generally bullish activity in the markets that really fell outside of normal for sentiment readings. And I believe that this all represents a climactic run that ended the bull market, as we now see occurring is a continuation of a bear market following this extreme bullish activity. Now let's turn our attention to seasonality. And I would like to thank seasonax.com for their remarkably good seasonality tool. I encourage you to go check it out. And the good news is that we are likely to have the seasonality Seasonax people on power charting sometime in the next number of weeks. So that's very exciting, and they're going to be able to show you all the features of the seasonality tool. So John, what we're looking at here is we're looking at the Standard & Poor's 500, 72 years of data. And this is all years, and this is just January, beginning of January through the end of December, and just adding together all the years and coming up with a plot, an average plot for each of the periods through the course of a typical year. And so the seasonality tends to rhyme. It's not perfect, but it often rhymes with the where the market is going and where it's headed. You can see here, starting in October, in a typical year, the tendency is for the seasonality to be strong from late October into the end of the year and beyond. So that's just to give you an idea. Now, here's the important thing. Look at the month of September. September is typically the weakest month of the year for performance for the Standard & Poor's 500 and for most stock indexes. So John, we're looking at the beginning, this is being recorded on September 1st, at the potential looming for a month where there can be trouble in the indexes. What do you think?
Well, it's not an encouraging picture on a seasonality basis. Certainly, we have highs in July coming down through August and yet to right September, but not very positive on the
Now,
seasonality.
well, let me give you some hope. So here is the seasonality 72 years. And what we've done is we've just looked at the midterm election years. 2022 is a midterm election year. So let's just see the seasonality for the midterm years for the past 72 years and see if we can find a pattern or a succession that can occur that could tell us where we might go into the end of the year. So again, here is month by month performance, and underneath you can see this is the performance of each of these months through the end of August. And John, look at the month of June. Month of June is the worst month of the year in the midterm election cycle, and very bad month for performance in the S&P. And but actually April was even worse. So August is a negative month, and it was down about half of what June was down. So, but where are the really good months of the year in these midterm election cycles? They are in the fourth quarter. It starts in October, November, December. And so that, I want to give you some encouragement, John, for the future.
Well, still looks red to me.
It still looks red. So what I want to do—
I'm seeing red, Professor. I'm seeing red.
It is. Well, note that the high for we have a high in early January, and then basically a downtrend into the end of September and certainly into the end of August, which pretty much correlates with what's happened this year. And so we can see that September produces a new low in the seasonality index, so to speak. And but this all could represent potentially an accumulation type structure. And so you can really see this, John. Look at this. You have climactic decline, and then a rally, range-bound condition, an attempt to rally in early September, and then a failure back down to the prior lows, which is the June low here in this seasonality index. And then look at the fourth quarter. The fourth quarter is the best part of the year for seasonality. So are you encouraged yet?
Well, I've got a little ray of hope there.
Okay. Now, what I've done, it's a little hard to see, but I've laid over the actual performance of the S&P 500 in 2022 against the seasonality. And I really want to point out that there is a, let me make sure I have my little highlighter going here, there is a rhyme to the way that you have the S&P 500 acting this year compared to the seasonality. So down in the first 2 months of the year, low was actually made seasonally in early February, wasn't made until early March in 2022. Then a rally. So we have a rally that occurred into March. This actually came to the end of March and then produced a decline from this point down. You can see real weakness occurring both in seasonality and in the index itself through this period, with a low coming in mid to late June. And we had seasonality making a low at the end of June, end of the second quarter. So do you see the pattern there, John?
I do. And I'm hopeful.
Well, so now we've had this rally that's occurred from June to August, and this peak here sort of correlates with the rally phase that we've been in July and August, and now we're seeing weakness into the end of August, and seasonality shows weakness. So here we are in the month of September with the potential, and the market is acting relatively weak here. If it stabilizes at our point and figure count objectives on our swing trading count, we could have a sideways type action here and then have some kind of a decline into a swing low, call it a spring, into the end of the year. Sorry about that. And so we will definitely be very cognizant of that potential, but September could prove to be a weak month in the market, and it seems to be setting up that way right now in the indexes. John, your thoughts?
Well, I'm rooting for the seasonality analysis during the midterm years. Hopefully it's going to go.
Yes, I agree. And so here, if we can get across this area here, some kind of a cause building process, Wyckoffean cause building process that is countable, we can potentially build a cause that could lead to this best rally of the year into December. Now, we want to wait till we see this. Now, again, these are my views. These are not Seasonax's views. I'm taking my interpretation and putting it on this chart. But if we can get a cause built across here and a count that gives us potential for higher prices by the end of September, end of the quarter, beginning of the fourth quarter, that could be a scenario that we would certainly welcome. But right now, we just have to be respectful of the weakness. So, John, your concluding thoughts?
Well, I think you said it all, Professor.
I appreciate your help today. We are going to come back and talk about the sector work next week because it's pretty darn interesting here where we are right now. So with that, we'll say so long. See you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.